makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. Here's what's coming up on today's program. President Biden is said to be weighing a trip to Israel as Secretary of State Antony Blinken returns for more talks as the U.S. tries to contain the war between Israel and Hamas, while Gaza continues to brace for a ground offensive amid a humanitarian crisis. Diplomatic efforts to contain the conflict are steadying markets, with European stocks flat, U.S. futures edging a little bit higher, and oil slipping after surging almost 6% on Friday. Plus, Polish stocks rally, with the country's opposition on course for a majority after Sunday's election. Now, the results, of course, denying the ruling nationalists a third term, steering the country back into the European mainstream. Now let's take a look at the European markets map. We gave you a nice snapshot of exactly what's going on into some of these equities. We're seeing a bit of fluctuation, actually, when it comes to some of these European stocks. Again, Treasury is actually dropping, traders trying to track efforts, really, by the U.S. and its allies to try and prevent a further escalation in the Israel-Hamas conflict. Now, it's all playing out with the price of oil. That's probably the most important proxy when it comes to a conflict possibly widening. Now, oil prices trading in a pretty narrow range, so they've held up consistently as U.S. officials again are trying to rush to speak to Middle Eastern nations, including back-channel talks with Iran. If something were to escalate, you'd probably also see it here. This is a two-day chart. You can see 5.3%. When I was in Marrakesh talking about these IMF meetings, a lot of the focus on the fact that the price of oil, despite everything that was going on, had held up and not shot up by $10 to $15. Now, President Biden is, we understand, said to be weighing a trip to Israel, adding to the U.S. diplomatic push. Meanwhile, Israel troops continue to amass near Gaza ahead of an expected ground offensive targeting Hamas militants. Now, the UN says Gaza is facing an unprecedented humanitarian catastrophe after Israel ordered more than 1 million Palestinians, almost half of the territory's population, to move south. Now, Biden has warned against Israeli occupation of Gaza and said U.S. troops do not need to be deployed on the ground.
Can you foresee U.S. troops in combat in this new Middle East war?
I don't think that's necessary. Israel has one of the finest fighting forces in the country. I guarantee we're going to provide them everything they need.
Well, let's bring in Bloomberg's Oliver Kirk, who's in Tel Aviv, as well as Bloomberg's Roz Matheson. So thank you both for joining us. Oliver, what's the latest, actually, on the expected Israeli ground offensive?
So, Francine, we have, as we know, hundreds of thousands of troops that are sort of standing ready at the Gazan border in the south here of Israel. There's an evacuation corridor in effect today, as there was on Saturday and Sunday, from 8 a.m. until about an hour from now, which is basically the Israelis saying that they will not bomb the key arteries for the civilians to move from the north of Gaza down through the south, a task which many of the aid organizations say is completely impossible without great human suffering. We're talking about the displacement of about more than 1 million people, and this, according to some estimates from the Israelis, 500,000 to 600,000 have already moved, and that's as 2,600 are dead, according to the Palestinian figures, and 1,400 Israelis dead, mostly killed on that Saturday just over a week ago. And the issue in Gaza right now is the inability to get aid in, which is one of the main issues on the deterioration on the ground. No water and electricity, which are in very limited supply. The focus, though, has also moved to the north, where there have been more skirmishes on the border with Lebanon. We also understand that the Israelis are evacuating the Israelis that are 2 kilometers off of the Lebanese border. And that comes again. We also had some diplomatics here yesterday. We had some of the senators, Chuck Schumer, Mitt Romney, among 5 of lawmakers that were here in Tel Aviv to give a press conference giving their full support to Israel, a press conference that was delayed by air raid sirens.
Roz, we understand, of course, that Secretary Blinken has returned to Tel Aviv in a bid to contain the war. There's also talk of President Biden arriving in Israel. Does that change anything?
Well, obviously, you can see just the diplomatic frenzy that's going on. There's also talk the German Chancellor, Olaf Scholz, may try and get there as soon as tomorrow also. So a series of very high-level visits potentially, and that's all about doing several things. One is potentially simply to try and deter a full-scale ground war inside Gaza. The more senior officials are there, the longer that might take. It's also to up that diplomacy in the region and trying to urge actors like Iran, obviously, not to escalate in the event of a ground war. You just heard about the skirmishes that are happening in the north of Israel with Hezbollah, which is backed by Iran. Real concern if there's a full-scale ground war inside Gaza, that will just pull Iran in. And then you've got a regional conflict.
Yeah, and Ali, so we know that the U.S. Secretary of State did stops in Jordan, Bahrain, Qatar, Egypt, Saudi Arabia, and the United Arab Emirates. Do we know how those went?
So what Blinken has said is that a lot of the talks were very productive, particularly with the Crown Prince Mohammed bin Salman. We do not have a huge amount of detail in terms of the sort of concrete outcomes from there, but we know that the focus was on three things. Was one, reducing the sort of possibility of escalation and spillover. Two was aid, and then the third was the hostage situation. On the hostage negotiations, obviously all of that is kept very, very quiet. We understand there's a lot of back channeling going on. On aid, there may have been some progress made on the Rafah entry point to Gaza, which is on the southern border of Gaza into Egypt. There may be aid that be able to eventually come through there, and also foreigners that can come out. And we also understand from some of the Egyptian ministries that they're preparing for an influx in their hospitals of Gazans potentially. And then the question of escalation really is two-sided, and it's a really challenging one for Blinken. On the one hand, trying to talk down Iran and trying to back channel with these sort of Arab leaders, but then also on the other, trying to give the full support to Israel while at the same time cognizant that how Israel goes about chasing after Hamas and trying to dismantle Hamas is going to have a huge impact. We saw countless protests of thousands and thousands of people across the Arab world and even, across the world entirely. And this is something, the political reality that the Israelis need to be very conscious of, and certainly that the United States needs to convey in some way to the Israel leadership.
Yeah, and Roz, at the same time, as Ollie was just mentioning, there are increasing attacks from Hezbollah on Israel's northern border. So what's the right way? Do we know? Do we have any insight into some of these back channels between the U.S. and Iran? What could have been said and what could have been agreed?
It's just very interesting the US has publicised these back channels. These are things that generally do not get talked about in a public forum, and very much, again, reflects that growing sense of, like, where are we headed with all of this? But what we can see is the messaging to Iran from the US, from others, which is like, we very much do not want this spiralling outward. Israel would not go into Gaza to occupy it, to stay there. They would go in to try and destroy Hamas and then leave again, and very much try and keep it contained. Because you can see the rhetoric from Iran. It's rising also, and from countries like Egypt in all of this. So you've got a very heated environment. Iran is saying, well, hang on, if you do this, we might be compelled to do that. Do they do that directly? Do they do it through proxies, again, through Hezbollah? Either way, it's going to get very, very messy, potentially. So what the US is saying is very publicly, we're engaging Iran. We want to talk about this. We hopefully want to keep it on a more even keel.
Roz, where's China in all of this? Do they have a role to play?
Well, that's very interesting. The US is also publicising its efforts to get China to engage with Iran, saying that China's got some cachet with Tehran. They can help negotiate. They can help keep things on that lower boil, and calling repeatedly on China. We've seen the US Secretary of State having phone calls with the Chinese Foreign Minister Wang Yi, repeated phone calls, it seems, even, and again urging China today to follow through. The question is, how much influence does China actually have? Does China really want to get involved? From the language so far from Beijing, it seems they don't want to.
Roz, thank you so much. Roz Matheson there, and our Oliver Crook in Tel Aviv. Now, coming up, we'll also dive into markets as treasuries drop, as traders track these U.S. efforts to contain the Israel-Hamas conflict. We talk markets next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, demand for haven assets easing this morning with treasuries sliding as traders weigh U.S. efforts to prevent further escalation of the Israel-Hamas conflict. Now, joining us now for a look at the markets is Hannah Smith, State Street Vice President for ETFs. Hannah, as always, thank you so much for joining us. It's a heavy week. It's been a heavy 10 days, and markets haven't really fully priced anything, actually. They seem to fluctuate. What do you think they do next?
Yeah, I think at the moment the market... Well, good morning, firstly. It's great to see you. I think at the moment the markets coming into what we saw with the Israel-Gaza conflict were already extremely cautious. And so what we've seen is some increase in risk aversion. But given where we saw the markets already, as in high allocation to defensive and really a risk-off sentiment, that hasn't really changed too much. I think the big narrative now is the higher for longer. And what we saw in December is returns in the bottom 20th percentile of anticipating that now we're going to have rates for a longer period of time, and that's really what's been moving them so far.
But oil has nudging up a little bit, nothing huge, but if it goes a little bit more elevated, does it change the case for interest rates, actually? So higher for even longer or even higher than we're expecting? Yeah,
definitely. I think that's the biggest concern. And if we look at oil at the moment, as you mentioned, it hasn't moved significantly. However, if we do start to see supply constraints, then this could really push up the oil price. And then that's when the risk really comes for inflation expectations.
What do you look at in terms of, I don't know whether it's Fed speak or Fed speakers or University of Michigan or anything like that, to really give you a sense of whether there's also a stagflationary danger in certain parts of the world?
Yeah, it's a great question. I think at the moment what we're looking at now is a big focus is on the US and whether they're going to be raising rates in the next at the next meeting. And I think the Powell comments on Friday are going to be hugely important. And I think that's really going to give the market an idea as to whether anticipate additional rate hikes or not going into the end of the year.
And I mean, higher for longer, we talk about tabletop, unclear for how long they'll stay at these kind of levels and what breaks next.
Yeah, definitely. And as I mentioned, this is really the biggest concern for the markets. I think at the beginning of the year, there was this expectation that rates would peak and then there would be some period of time and then we'd start to see rate cuts. And what's really agonizing the markets at the moment is there is no clear insight into how long rates are going to stay higher for. And this is really provides investors with a lot of concern because then there's not a clear idea as when to enter into equities, when to enter into fixed income.
What's the ideal time, actually, of entering into both?
Well, I think, actually, if there were a recessionary environment, then that would be actually quite a good time to enter into equities. That's when we'd expect valuations to look a little bit more attractive. At the moment, on a relative value basis, equities do look slightly more attractive. However, that's very much in the defensive sectors. And then also with a little bit of energy, given the pressure on oil prices at the moment.
And I also had a good conversation, actually, with the Standard Chartered chief executive, and Bill Winters, and we're talking about U.S. debt and the fact that the market haven't 100% latched on to what this means longer term, right? So what it means for U.S. dollar and for companies that have a lot of their revenue in U.S. dollars. Is that something that's on your mind?
Yeah, I think so. I think it's incredibly important, and particularly now with rates being higher, I think what we're likely to see now is a big refinancing wall and the impact of higher rates now being passed on to companies and obviously the abilities for governments to repay their debt as well. So it's definitely an area to watch.
Do you worry more about Europe than the U.S. because of the proximity also at some of the geopolitical points?
Yeah, I think so. I think Europe's been quite interesting because there was obviously a lot of concern after the outbreak of the Ukraine war and the ability for Europe to maintain its energy reserves and also withstand a recession. And we actually saw a positive outcome last year. Europe was able to avoid a recession. The growth was at 3.4%. And also their gas reserves are incredibly high now, between 90 and 95%. They're only 55% before the war. So Europe's been very resilient and valuations are quite attractive. So I think it's one to watch from a market's perspective. But obviously, if you compare it to the US, growth has been incredibly strong there. So there's different dynamics within both markets.
And what about the UK?
Yeah, the UK. I think the UK is quite delicate at the moment. Growth is okay, not extremely strong. I think that if you look at the UK from a market's perspective, actually a weaker sterling is beneficial because the majority of companies generate their revenues from overseas. But I do think that the UK, given its sector mix within the markets, is quite attractive from an investment standpoint.
Hannah, thank you so much, as always, for joining us. Hannah Smith there, Vice President of State Street's ETF business. Now, coming up, we take another look at oil markets as the U.S. warns Iran not to escalate the Israel-Hamas conflict. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, oil is trading in a narrow range after last week's gains, with Israel yet to launch its ground offensive into Gaza and the U.S. ratcheting up efforts to contain the conflict. Now, joining us for more is Amrita Sen, founder and director of research at Energy Aspects. Amrita, as always, thank you so much for joining us. Tensions are so high, and it's unclear what this means for oil imports, oil exports, but also, I guess, oil demand in general.
Yes, and I think what I've seen last week, for the first time in a long time, traders are really struggling to figure out how to trade this because there's no direct supply losses. Yet the region, I mean, we've got Iran, we've got the whole GCC, we've got Iraq. The geographical proximity is probably just too close for comfort. And we saw prices go down 2 weeks ago on the back of just positioning and macro fears. And then, of course, you saw the rally on Friday. Nobody wants to be short into a weekend as well. And right now it's just a lot of we don't know how this goes.
So let's talk about what we know, and then we'll maybe try and figure out what could happen next. But how's demand holding up?
Demand's okay. I mean, of course, it's slowing, which is what is to be expected. The global economy is slowing, US for sure. A lot of the excess savings that we've accumulated over COVID, that's coming off, and we are predicting by the end of the year, at least in the US, all that excess savings would have gone. So gasoline's held up really well compared to, what the macro backdrop has been. But that's the thing we are watching very closely that could actually mean that gasoline demand slows further. And we've seen gasoline prices come off quite sharply. Diesel, industrial recession ongoing. European demand has definitely been weak. But the rest of the world is, and emerging markets really good. Like China, India is still holding up very, very well.
And there's enough supply out there.
Yes,
right?
Yes.
So that's been, so if something were to happen, if the escalation, continues in this conflict, what happens to Iranian oil?
I think that's the risk the market's trying to price. Everybody, and rightly so, is trying to downplay Iran's involvement because, again, there's no upside in escalating it. But the market is focused on, Iran's been exporting about 1.7, 1.8 million barrels per day of oil. Now, there's another strand of thought that the U.S. would enforce sanctions more they've turned a blind eye so far this year, but it's hard for them to do that given China is the only buyer of Iranian oil and they bypass the U.S. banking system anyways. But that's really the focus. I mean, we don't think, or rather I'd say that we think the probability of a strike on Iran is very low. Yeah. Of course, right now, given the situation, you can't rule anything out.
Yeah. I mean, there has been in the past, saying or thoughts and saying, look, they could close the Strait of Hormuz in terms of an escalation.
Yes.
Does that send the price of oil to 150?
I mean, look, any escalation would, because ultimately inventories across the board are super low. Diesel, gasoline, and products in particular, because refining has really struggled. The positive for crude is that at least there is spare capacity. Saudi Arabia, Russia, they've voluntarily cut production that could be brought back in the event of a genuine supply loss. But ultimately, the market's extremely tight. So yes, I would expect a very quick, rapid rise in prices if there were to be an escalation.
I mean, what are inventories like? I mean, strategic reserves, it's unclear whether we actually have that much bandwidth, right, to release.
Yeah, I mean, I would say the U.S. government's kind of used up its chips in some ways. They've released so much inventory last year from the strategic reserve, little bit this year. But yeah, sure, you could do another 120 million barrels before you're effectively at levels which, integrity of those caverns are in question. But I don't know whether you'd want to necessarily do that at a time when geopolitical tensions are rising and there could be potential supply losses. And I think that's the challenge, and which then means, again, Iran's already in the market. So where is your incremental source of supply outside of OPEC?
And Amrita, I mean, this is, again, speculation. We don't, but if there were something happening in terms of escalation, could Iran sell the oil elsewhere and actually the Western world gets reserves from other parts of the world? Or a little bit like we had with Russia, where there was, moving around, but actually we still had enough.
The problem is that the sanctions on Iran, I mean, there's European sanctions, there's US sanctions as well. So the only country that can buy Iranian oil is actually China, and they're already doing so. That's what makes it trickier, that where else could it go? And I think, if anything, China, it's paused its strategic reserve refilling, but there's rumors again that given the geopolitical tensions, they might restart it. So other countries are actually thinking more about long-term stability and supply and making sure that they have enough inventories. I think the West has been a bit short-sighted about this, and I think that's where the discrepancy lies.
Is there a case where actually the price of oil drops from here?
I would say,
demand
look,
destruction?
Yes, of course. I mean, not at current prices, right? I think current prices are low enough, especially inflation-adjusted prices are not high at all. So I don't buy into the argument that even $100 oil, I don't think is high enough to kill the economy. But if there was to be a severe slowdown driven by higher interest rates and the Fed over-tightening, then of course, yes. But I think that's also exactly where Saudi Arabia and OPEC Plus will remain very vigilant, come in, and if required, cut again. But, again, it's not our base case, but to your point, it could happen if the economy were to falter.
Amrita, thank you so much, as always, for joining us. Amrita Sen, our founder and director of research at Energy Aspects. Now, we do have a piece of news that we need to bring you. This is actually on United. Manchester United falling some 18% as the Qataris are set to withdraw their bid for the football club. So for the moment, you can see, I think we have, there you go, Manchester United now down 12%. It was pre-market down 18% just moments ago. Now, coming up, we'll be speaking to the Israeli ambassador to the EU and to NATO, Haim Regev, as Israel prepares for a ground offensive in Gaza. That's coming up next. And this is Bloomberg. President Biden is said to be weighing a trip to Israel as Secretary of State Antony Blinken returns for more talks as the U.S. tries to contain the war between Israel and Hamas. Gaza continues to brace for a ground offensive amid a humanitarian crisis. Diplomatic efforts to contain the conflict are steadying markets, with European stocks flat, U.S. futures edging higher, oil slipping after surging almost 6% on Friday. And Polish stocks rally, with the country's opposition on course for a majority after Sunday's election. The results denying the ruling nationalists a third term, steering the country back into European mainstream. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the European Union leaders will hold an emergency virtual summit tomorrow on the conflict in the Middle East. The EU has strongly condemned the attacks by Hamas and called for Israel's response to comply with international law. It comes as we're told that President Biden is weighing a trip to Israel as the White House seeks to avoid further escalation. Well, we're now joined by Haim Regev, Israel's ambassador to the EU and to NATO. Ambassador, thank you so much for giving us a little bit of time. I know it's a very busy day for you. The U.S. Secretary of State Antony Blinken, we understand, will make another unscheduled return to Israel after stops in Jordan, Bahrain, Qatar, Egypt, Saudi Arabia, and the United Arab Emirates. What have you learned about U.S. diplomacy over the weekend?
Before touching U.S. diplomacy, let me say that we were very touched by the visit of the leader of the EU in Israel, President von der Leyen, President Metzola. They were the first leader that come and visit the site. And we were very touched by the strong support that we see here from Brussels. As for the U.S. is active. They try to, first of all, we get in a strong support from the U.S., and it's very and extremely important. And it's important also that the region, the leader of the region, the Arabs, will understand exactly the implication of what's going on. This war that Israel, that actually was initiated by Hamas. It's not only the war that Israel, it's not only against Hamas. Yeah. I think it's more than that. And we should get the full support.
Ambassador,
yeah.
We understand that Secretary of State Blinken wants everything to de-escalate. Do you think it will be de-escalated? Is it confirmed, for example, that the U.S. president will soon visit Israel following an invitation by the Prime Minister?
We are working on these visits and other. Right now, we are focusing on eliminating Hamas. Hamas conduct a crime that right now we are focusing on eliminating their capability and focusing on that.
Yeah. Do you know more about the exact reasons why President Biden was invited and why he's considering such a trip amongst hostilities? Do you need the president to go to Israel, and do you think this war will be de-escalated?
First of all, it's a show of support. It's extremely important that we keep see this kind of support, and we see and feel this support from the U.S., and this is part of this visit. Show strong stance together with the state of Israel. As for de-escalation, right now, we are focusing, as I mentioned several times, on eliminating Hamas and its capability.
Ambassador, Secretary Blinken says it's critically important how Israel goes about pursuing Hamas. Do you think a ground invasion of Gaza will provoke a second front of this war?
We hope not. We are ready to everything. Right now, we are focusing on Hamas. This is the goal. This is the aim. And we try to avoid other fronts, and we hope that it will not happen. But right now, as we speak, the focus is on Hamas, on Gaza, eliminating his capability and fighting against him.
Yeah. Ambassador, have EU officials been raising humanitarian and international law questions to you when it comes to Israel's actions in Gaza?
There are some concern, but Israel keeps saying that we will act according to the international law. Our aim is not to harm any innocent or uninvolved civilian or population. We are targeting Hamas, its activities, its facilities, and do not harm anyone who is not involved. The problem right now is that Hamas using the local population as a human shield against our to avoid our activity, and this is right now the biggest attempt by Hamas. Yes, please.
How are you coordinating with Europe on humanitarian aid in Gaza?
Right now, we are in touch, and we got approached by some EU official on that, and we are focusing right now, as I mentioned, on the military activity, on Hamas. And we are looking ahead, and we will see whatever will need it to be provided. We will work on it. But right now, this is the focus.
There have been also tensions in a lot of European countries with protests and solidarity with both Israel and Palestinians. How closely are you watching this?
We are looking into, of course, we are looking into those. But for the meantime, we feel the strong support, the full understanding, what happened there. The atrocity that Europe saw, that we face, and Europe saw, I think that the implication of that is strong support for the state of Israel. There are some others that try to counter this, but as for the meantime, we see mainly a strong support from leadership and as well as from the street.
All right, Ambassador, thank you so much for your time today. Haim Regev, Israel's ambassador to the EU and to NATO. Now, coming up, the U.S. is said to be planning to further tighten curbs on China's access to advanced semiconductors and chip-making gear. We'll get the details shortly. This is Bloomberg. The conversations that matter, the insights you need. This is the Pulse. I'm Francine Lacqua here in London. Now, China's central bank is making the biggest medium-term liquidity injection since 2020. This comes as the PBOC steps up efforts to support the nation's economic recovery and debt sales. Now, the move comes as Beijing considers a new round of stimulus to help the economy meet the official annual growth target of around 5%. Now, the U.S. is said to be planning to further tighten measures restricting Beijing's access to advanced semiconductors and chip-making gear. Well, for more on all of this, let's bring in Bloomberg's Alan Wan. Alan, hi. Thank you so much for joining us. So do U.S. officials actually see loopholes from the sanctions announced last year?
Yes, that's right. I think when the U.S. announced the measures last year, they did rather quickly without actually getting their allies on board, countries like the Netherlands, South Korea, and Japan. And now they're going to try to prevent some of these U.S. firms from exporting their chips to these other countries. So that's part of it. And then the other part is the fact that in August, Huawei was able to launch a new smartphone using a very advanced semiconductor. And there's a feeling that something needs to be done, even though it looks like Huawei was able to develop its new smartphone through homegrown semiconductor technology. But there's definitely a feeling that the U.S. had to do something in response to everything that's been going on here in the last few months.
What exactly does the U.S. plan to do to fill those loopholes?
Well, one thing the U.S. is going to do is it's going to restrict exports of these kind of chips, especially the accelerated type chips. Those are using AI, large language models, being exported to the overseas units of Chinese companies. Also, U.S. companies that want to export to other countries like the Netherlands and South Korea are going to have to get a license as well in order so that there's no, way around, these sanctions.
Alan, thank you so much. Alan Wan there, of course, on the very latest ongoings in China. Now, here are some of the other stories that we're watching today. Australia has voted overwhelmingly against including First Nations people in the country's constitution, rejecting a proposal to set up an Indigenous advisory body to Parliament. The Prime Minister, Anthony Albanese, is facing a struggle to reunite the country after the failure of the measures, one of his key campaign promises. Now, the heir to a fruit exporting dynasty will become Ecuador's next president. Daniel Noboa beat his socialist opponent, Luisa Gonzalez, in a runoff with over 90% of votes tallied. It was Ecuador's bloodiest presidential election in living memory after one candidate was gunned down while campaigning. Now, Noboa will now prepare to take on Ecuador's economic issues and political instabilities. And New Zealanders have picked a centre-right government to manage the mounting economic challenges in the aftermath of the pandemic. Now, Christopher Luxon is set to become the nation's new prime minister after his National Party won the lion's share of the vote in Saturday's election. Now, let's switch focus to U.S. banks and bank earnings. Well, J.P. Morgan has posted another quarter of record net interest income and boosted its forecast for the year. However, the chief executive, Jamie Dimon, warns the economic outlook is getting cloudier, especially given rising political risks. Well, let's get more on all of this now with Bloomberg's Charlie Wells. Charlie, you do this so well. When you look at the reports on Friday, what really stood out?
Well, Francine, we kind of went into this earnings season almost feeling like it was that dreaded dentist appointment. And we actually got there, and there were no cavities. It was actually a lot better than people thought. So there'd been so much negativity going into this third quarter. We had the regional banking crisis earlier in the year. We had all of this volatility in the bond market. And also, bank stocks have been really underperforming this year. But we saw at J.P. Morgan, they had a boost from that interest income. Same thing at Wells Fargo. And then a group at Citigroup, a trading group at Citigroup actually overperformed.
So what are you expecting from Goldman Sachs and Bank of America?
I mean, very different banks, right? I think with Goldman, we've got that investment banking focus. I think there is some expectation that they could get a lift from equities underwriting. We've seen more activity there, which we've been hoping for a really long time. Bank of America, I mean, they have more exposure to some of these long-dated treasuries, so there could be some surprises under the hood. But given Friday, it's seeming like a rising tide is very likely to raise some of these banks as well.
Yeah, it's incredible. The U.S. economy seems strong, Charlie. Thank you. As always, Charlie Wells there with the very latest on the U.S. banks. Now, the rout in the U.S. government bond market can also be attributed to the absence of all of its anchors. At least that's according to Mohamed El-Erian, the chief economic advisor at Allianz and Bloomberg opinion columnist.
Monday, Tuesday was about dovish Fed statements, lower yields. Wednesday, Thursday was about somewhat hotter than expected inflation, higher yields. Today is about geopolitical concerns, lower yields. So that's the easy answer. The harder answer is that we have lost all anchors to the bond market, all of them. We've lost the economic anchor, we have lost the technical anchor, and we've lost the policy anchor. So what we're seeing is this enormous volatility. So far, we are lucky in that when we have overshoots, it triggers some sort of reaction. If yields go too high, some people start wondering about locking in higher yields for longer. If they suddenly go down quickly, those who have been caught offside with massive positions, loss-making positions, take advantage of that. So the good news is there is a certain amount of range-bound dynamics, but nevertheless, this sort of volatility is simply indicative that we've lost all anchors for this bond market.
Well, let's talk about another anchor we've lost and another situation as well. Yesterday was a two-part story. You're right to point out CPI, small upside surprise, yields start to drift higher. Then we had this really soft 30-year auction in the afternoon. Mohammed, if we'd also lost predictable sources of demand when we get supply from the Treasury?
Yes, we have. and we're facing higher supply from the Treasury. So the most important buyer, the non-commercial buyer, the Fed is out. The Fed is a seller. That's gone. And don't underestimate the importance of a non-commercial buyer that buys in very big amounts and that is predictable. So the Fed is gone. There's questions about overseas buying. Japan, China, big question marks, especially about China. And then there are the traditional buyers who have been caught offsides by buying too much when rates were artificially low. So there is a real question out there about who's going to buy this additional supply. And if the economy does not weaken, then the path of least resistance for yields is higher.
As things stand, Mohammed, then, does this compromise the Fed's approach to monetary policy?
Look, the Fed's approach to monetary policy has been compromised for such a long time. The minute you're late and the minute you mischaracterize inflation, you then have to go faster, and then you accelerate these dynamics that are taking place. So it certainly complicates it. I think there's a lot of question mark about this narrative that has settled into the market. Don't worry, the Fed will have to do less because the market's going to do more. It doesn't quite work that easily, but it is a very complicated policy outlook.
All right, let's also talk a little bit about football. Manchester United is falling significantly pre-market. I think it was down some 16% at the open of the pre-market, now down 13%. And this is after the Qataris have said they will withdraw their bid for the club. Now, coming up, an exit poll suggests Poland pro-EU opposition is on track for a majority, ending 8 years of rule by the Law and Justice Party. We'll get the latest live from Warsaw next. This is Bloomberg. The conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. Now let's take a look at the European markets map. A lot of the focus, of course, is on a possible escalation in the Middle East. What this brings or what this means for the markets, frankly, is completely unclear. And when I was at the IMF World Bank meetings, a lot of the market participants were saying if anybody really game theories what it means, they just don't know. So it's very, very difficult to make a call right now. What we do know is that the markets are somewhat fluctuating. I think the UK is holding on to some of their gains. A lot of the focus is also on everything that we've heard from, of course, treasuries and this higher for longer idea from a lot of the banks or a lot of the central banks. Now, Shell, let's look at Shell because Shell shares have been rising to a record high in London. We know that the new chief executive, who has been in charge for, I think, a little under a year, has been doing everything he can to give back to shareholders. He has also done a bit of a pivot away from some of the green initiatives that his predecessor had put in place. So Shell shares have risen to a record high in London. I don't know whether we have the share price for Shell, but if we do, it's a good time to bring it up. At the same time, the focus is on the price of oil. We had a terrific debrief from Amrita Sen, who again was saying, look, oil for the moment is trading in a narrow range. The U.S. is trying to contain the crisis in Gaza, but it's unclear what will happen. We know that over the weekend, U.S. officials rushed to speak with Middle Eastern nations, including back channel with Iran, to contain the conflict. We also know that Secretary of State Blinken returns to Israel today. President Joe Biden is also considering a trip there in coming days. You can see over 2 days, the price of oil is 5% higher. Now, stocks surging in Poland today as the country's pro-EU bloc is seen winning the election. Well, Bloomberg's Warsaw Bureau Chief Piotr Skolimowski joins us now for more on the story. Piotr, thank you for joining us. So run us through the latest. Is Poland heading back to the EU mainstream politics?
Hi, Francine. That's what it looks like at this point, indeed. So what we're seeing is that according to the latest opinion polls, or the so-called late poll, which is based on some of the votes counted 50%, and the projections, we're probably going to see a change in the government, not very quickly. At this point, what we're seeing is that the Law and Justice that has been in power for 8 years will probably be ousted by a three-way coalition of parties led by a civic coalition of former European Council President Donald Tusk. Obviously, with Tusk in charge of the government, that would mean better relations with the EU, which have been strained for a while. The EU has withheld about 35 billion euros of EU funds from Poland over rule of law concerns. And at this point, this seems to be the priority for Tusk right now and his government or his coalition, once it's formed, to make sure that this money keeps flowing. But overall, the idea is also to improve the relations, also relations with Ukraine that has also been strained over the last few months. So quite a lot to do for Tusk. But at this point, we're still waiting for the final results, and we're still waiting for then the discussions over the coalition.
So, Piotr, why are markets reacting so strongly to this news?
Well, obviously, one thing is certainly the fact that the ruling coalition, that there is going to be a change, and what we tend to call the pro-EU opposition taking power, that obviously changes the sentiment on the market. The fact that there won't be any more uncertainty about how those relationships with the EU and the rest of the world will develop. This is a major positive step for the markets. 35 billion euros that we're hearing that were withheld. The concern was this will be just the beginning. There's much more money that Poland is supposed to receive from the EU budget. That money was also starting to be, there was a big question mark that's starting to appear over that pot of money as well. So I think that's one thing. But also there's a question of the whole sentiment towards investors. The current government has been having all sorts of conflicts with Germany, for example, Poland's biggest neighbor and Poland's biggest trading partner. With Tusk, he obviously is very close to Germany. He wants those relationships also to improve. So overall, the opposition's victory or the next government led by the opposition would be positive for the sentiment for investors.
Piotr, thank you so much. Piotr Skolimowski there, of course, joining us with huge analysis, important analysis on Poland. Now, Shell shares are actually rising to a record high in London. Again, this is on the back of a lot of uncertainty with oil. For the moment, oil trading in a narrow range as the U.S. is seeking to contain the Gaza crisis. The U.S. president may also visit the region, actually, as Israel preps the ground invasion. Now, the share price for Shell is not moving by that much today. It's gaining 1.2%. But if you look at the context, it's now at a record high in London. Now, let's recap some of the top stories this morning. And the U.S. Secretary of State, Antony Blinken, has arrived in Israel for his second trip since the war with Hamas erupted. It's part of a diplomatic push by the U.S. and its allies to actually contain the conflict from spilling over to the region. Meanwhile, humanitarian concerns mount in Gaza ahead of an expected ground invasion by the Israeli military. Up next, Bloomberg Brief with Danny Berger in London and Manus Krani in New York. And this is Bloomberg.